All right, you're tuned in because you want the inside track on the Indian stock market. Quickly.
Yes, and today we're zeroing in on a really crucial part of the trading day.
We are. We're doing a deep dive into the pre-open session, that window on the NSE and BSE.
That's right. It's just 15 minutes, 9:00 a.m. to 9:15 a.m. Indian Standard Time, right before the main event.
But it's a packed 15 minutes.
Absolutely. It's basically where the opening prices for the day get hammered out.
So our mission here is to unpack how this whole thing works and, crucially, why it actually matters if you're tracking the Indian markets.
Yeah, we've looked into the mechanics, and it's cleverly designed. It's all about managing volatility.
And getting to a fair opening price, right? It seems built to avoid those chaotic starts.
Exactly. Think of it as the market, taking a breath, processing everything that happened overnight, earnings reports, global news, you name it.
So it stops those, massive price jumps the second the bell rings at 9.15.
That's the primary goal. Digest the news, set a reasonable starting point.
Okay, walk us through it. What happens minute by minute, or, well, phase by phase in those 15 minutes?
Right, so it breaks down into three distinct parts. First up, 9:00 a.m. to 9:08 a.m.
Okay, 8 minutes.
That's the order entry period. This is when you or anyone can put in buy or sell orders.
Limit orders, market orders, both.
Both are allowed. Limit orders where you specify your price, and market orders to trade at whatever the opening price turns out to be.
And you can tweak them during this time?
Yep, modifications and cancellations are still possible in these first 8 minutes, but, and this is key, no actual trades are happening yet.
Ah, okay. So it's like everyone showing their hand, putting their cards on the table.
Sort of, yeah. Then comes the next phase, 9:08 to 9:12 a.m.
4 minutes this time. What happens now?
This is order matching. Crucially, no new orders, no changes allowed now. The system locks everything in.
And then
The exchange runs what's called a call auction mechanism. It's looking for a single price point.
the magic number.
Uh-huh. The price where the maximum number of shares can actually be traded between all the buyers and sellers who put orders in. That's the equilibrium price.
Right, the point of maximum agreement, volume-wise. Okay, so orders are in, price is found. What's left?
Just a short buffer period, 9:1 to 9:15 a.m., 3 minutes.
What's the buffer for?
It's basically a smooth transition phase into the continuous trading session that starts right at 9:15. No new orders here either, just final checks, getting systems ready.
Got it. Let's make this real. Say Reliance closed at 2,500 yesterday. Then overnight, they announce amazing results. How does the pre-open digest that?
Good example. Okay, so during that 9:00 to 9:08 window, you'd expect a lot of buy orders to come in above 2,500.
Right, people reacting to the good news. Maybe orders at 25,550, 25,60.
Exactly. And maybe some sellers see the positive news and place sell orders a bit higher too, say euro 25.40 after 25.55.
Okay.
Then during the matching phase, the system looks at all those buy and sell orders. It finds the price, let's say at euros 2,555, where the most shares can change hands between buyers and sellers.
So that 2,555 becomes the opening price.
That becomes the official opening price at 9:15 a.m. Instead of potentially gapping up wildly, maybe to 2,600 bics instantly, the pre-open allows for this more orderly adjustment to 2,555 based on that news.
Okay, that makes a lot of sense. It really dampens the initial shock. So why is this specifically important for you listening right now?
Well, a few key reasons. Firstly, as we saw, it reduces that opening volatility. Smoother start to the day.
Less chaos.
Right. Secondly, it systematically bakes in all that overnight information before trading even starts.
Which leads to better price discovery.
Exactly. The call option reflects the collective view of supply and demand based on the latest info, leading to a fairer opening price.
And for me, the investor.
For you, it means you get an early signal. You can see the potential opening price develop during the matching phase. It helps you maybe avoid nasty surprises at the open.
And potentially adjust your own strategy before 9.15.
Potentially, yes. It also really helps stabilize things for big events like IPO listings or after stock splits or bonus issues.
Makes sense.
Yeah.
So can regular retail investors, like many of our listeners, actually participate? Or is it just for the big institutions?
No, absolutely. Retail investors, institutional investors, anyone can participate through their broker.
And does it apply to all stocks?
It applies to most stocks listed on NSE and BSE, particularly the major ones like those in the Nifty 50 or Sensex. There might be some exceptions for very illiquid stocks, but generally, yes.
Anything else to keep in mind if you're thinking about placing orders in the pre-open?
Yeah, a couple things. One, just because you place an order doesn't mean it will get executed.
Because of the matching process.
Right. It depends on finding that equilibrium price and matching volume. Your order might be outside the range or just not find a match.
Okay.
And also, circuit breakers still apply. Even in the pre-open, if a stock's potential opening price moves too dramatically, like 10% or 20% up or down, depending on the stock's category, trading can be halted temporarily, just like during regular hours.
Wow. Okay, so even the pre-open has safety nets.
Definitely. It's all part of ensuring market stability.
So wrapping this up, the big takeaway seems to be that this 15-minute pre-open session isn't just some administrative warm-up. It's a vital mechanism.
Absolutely vital. For price discovery, for managing volatility, for incorporating news efficiently, it really sets the tone for the entire trading day.
And understanding it gives you, the listener, a much clearer picture of how the market opens each day and helps you react more strategically.
Precisely. And maybe here's something to think about. How might knowing about these forces, this balancing act happening between 9:00 and 9:55 a.m., subtly change how you react to overnight news yourself?
Yeah, or how you approach your first moves of the trading day.
It might also be interesting to dig into the specific exchange rules on those circuit breakers we mentioned, just to get an even fuller picture of the guardrails in place.